This entire sort of slew of government action has pushed the Indian currency to very comfortable levels. 52, in fact, we broke 52 in morning trade, went to about 51.87 or so. Right now, trading flat at 52. Joining me to talk about the currency markets, Moses Harding, Executive Vice President and Head of ALCO at IndusInd Bank. Thanks so much, Mr. Harding, for coming in. Are we running on sentiment or are we running on real changes in terms of fund flows?
The recovery from 57 to 52 is not a surprise. The speed at which it has recovered is a surprise. Obviously, it's due to sudden reversal in sentiment and confidence. If you see the reasons for rupee fall to 57, it started with financial crisis in the Eurozone, then moved into the domestic issues of policy paralysis and fiscal consolidation. I think now post QE3 and political and monetary support to the macroeconomic fundamentals of the Western economies is going to drive the liquidity into India. And on the domestic front, the last 3 weeks, we are seeing the government in hyperaction to address the policy inaction and fiscal consolidation. So now we are, the policy paralysis which was talked about, which drove the markets down post FY13 budget, I think it's irrelevant now. So next 2 points are fiscal deficit and current account deficit. Now steps are being taken to address the fiscal deficit. And on the current account deficit, it's basically external driven, higher commodity prices and reduced consumption in the Western markets. So RBI is doing to address the current account deficit through attracting flows into the capital account so that the balance of payment stays positive. Yeah. Then on the inflation, downturn in the Brent crude below 110 and expectations of move towards 100 and rupee into 48.50. It's a very good news for inflation. So RBI has no case to delay shift into dovish monetary policy. So across the, I think we have only positive cues on store.
It's almost like the stars suddenly aligned.
That's right.
It's everything going in one particular.
It's a U-turn in sentiment and expectation that will obviously drive all asset markets up, including rupee, stock and bond.
So, Mr. Harding, what's your number now? I mean, 52, everybody said, is something that should hold. 52 to 53 is what most people said, at least until a week back. Now you've taken out 52. Where do you go from here?
In fact, post Chidambaram taking over charge as a finance minister, and he started working on the major issues which are going to improve the macroeconomic fundamentals of Indian economy, I had already set a long-term target at 49.
Okay. But long-term is when?
6 to 12 months target.
So
and we are going move towards that, but the speed at which we have reached 52 and probably the speed at which we will go towards 50 now in the next probably couple of months, it's amazing. Mainly that's due to there's going to be flows through debt and equity capital market, and that will keep dollar bids away from the system. Exporters are going to be in a hurry. That's a sign of panic on uncovered exports and covered imports. So it's going to be a one-way supply-driven market. So that's going to extend its rupee bull run despite RBI putting speed breakers now and then.
So you're saying 49 by, say, what, December maybe?
See, my target for December is 50 and 49 to 48 by March 2013. And the risk factor is any political crisis. Now, political crisis is not relevant. Monetary support is going to be there, so that's going to improve the macroeconomic fundamentals. That's going to be a strong growth story for India. So the only risk at this stage is political risk, and I have diluted the risk from commodity prices, which is going to impact inflation. So I see only a political risk at this stage, but the way the UPA is managing their show by rolling out the second round of reforms, I feel they are in command.
So since you mentioned commodity prices, and we should put that up on the screen, the oil prices came down by almost 4% overnight trade. So oil actually has been supportive to rupee gains as well. I mean, just that single factor.
No, post Q3, everybody was looking at a rally in commodity price. But fortunately, gold is rallying and not the crude oil prices. So that's a good relief for, I will say, the entire global economy. So downturn in crude oil and rupee appreciation, definitely it will reduce the pressure on inflation, and the negative expectations to the future will turn positive. Probably now there's a greater confidence of headline inflation coming into 6 to 7%, which will provide a great comfort for RBI. And I will not be surprised to see a rate cut this October policy.
Right. So one last question, and I don't have time to get into the rate side today, but I'm just wondering, in terms of, advice to exporters, importers, what are you saying right now? Because I've been hearing that exporters, like you mentioned, are sort of, selling forward dollars because they're fearing that the dollar will continue to cheapen.
In fact, my strategy for exporters was to sell 1 year receivables and for importers to buy 17 to 15 day payables. But even then, those who are bought 17 to 15 days payable, they are in pain because the way rupee is appreciating. So I think now importers will get into the shell and exporters will be in a hurry so as to maintain the dollar supply driven mode in the cash market.
So like you said, it will be a supply driven market.
That's right.
Thanks so much, Mr. Harding. Pleasure speaking to you as always. Thanks for giving us a sense on what's happening on the currency, and a lot is happening.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.